What a mad 24 hours it has been. In this video, we're going to reflect on some of the news articles, some of the data and the charts at the macro level to review what I think is likely to happen. Has anything changed? Are we still bearish, or has things all of a sudden out of nowhere turned bullish? That's the purpose of this video. As I get into it, if you find it useful and informative, smash that like button. I do appreciate that. If you're new, subscribe. If you haven't joined us in Discord, guys, you're missing a trick. Check it out, linked in the description down below. I don't think you'll be disappointed by what you find down there. Since we've got a lot to discuss, let's jump right down into it. We're going to start things off, I think, by taking a look at the on-chain data, what's been going on, and all that kind of good stuff. So, top right-hand corner, we have inflows, outflows, and the difference between the two. These are from the 1st of January 2023 to yesterday, which would have been the 12th of March. We can see 2.0004 million goes onto the exchanges and 2.0143 million comes off the exchanges, essentially meaning that exchanges have lost, I say exchanges, but Bitcoin has flowed away from the exchanges at 13.9 thousand. So we can see that there's a little bit of accumulation that's occurred here. So we have to consider where that accumulation is occurring and where it is not occurring. Okay, is it smart money that is buying, or is it just dumb money that is purchasing up? We can also see that there's a slight down movement here from our sideways trade. It is minor at the moment. But basically, this is the balance of Bitcoin on the exchanges after all the inflows and outflows. We can see that there's a little bit of a balance to the downside. So Bitcoin's flowing away from the exchanges. This is pretty common considering all the fear around banking and exchanges, who's solvent, who's not solvent, all that kind of stuff. We do expect to see withdrawals. So if you haven't yet done so, get yourself a hardware wallet. In my opinion, they are just another layer of protection. You hold cryptocurrency, that's a risk-on asset. Do you have to hold that risk-on asset on a risky exchange, for example? There's a link in the description to Ledger down below. If you haven't already got a hardware wallet, check that out. Just anything I would say, there's many different brands out there. Just make sure you buy it directly from the manufacturer. We like the Ledger devices. We use the Ledger devices. We're very familiar with them. So if you have any troubleshooting, the Ledger device will be able to kind of help you in the Discord server. As I said, link in the description down below. If you do use that link, not only does it take you directly to the manufacturer, it also helps support the channel and all that kind of good stuff. Now, over here on the exchange net difference over 30 days, each one bar is 30-day average, we can see that we're starting to see a little bit below the midline. This basically means more Bitcoins flowing away from the exchanges. It is minor at the moment, though. Let's go ahead and take a look at those inflows on the line graph. And here we can see that over Sunday, we actually had a significant pullback after a move upwards over the weekend. So pretty typical. We did actually see more Bitcoin actually flowing onto the exchanges yesterday. So 33,920 going on and 33,129 coming off, right? So minor stuff. At the moment, this is not really bullish, not nearly bearish. It's very, very neutral if we were to think of just inflows and outflows as supply and demand. Ultimately, the volumes are low for a 3-month period, essentially very, very low overall. So we have to kind of consider that it's not a bullish market volume profile. Now, as I come and take a look at Bitcoin wallets, here we have the most vulnerable retail investors. These are basically wallets that have over 0.01 BTC. Okay, and we can see that these have spiked up a little bit. 11,651,517 wallets now. I'm expecting these guys to get shaken out at some point. Don't want to. I want them to survive. I just don't think they're going to have the emotional capacity to be able to stay in the market when things really start to get rocky. And I think we're finally starting to get into those uncomfortable bear market situations. FTX was bad. Celsius was bad. Luna was bad. But they were manageable. They weren't uncomfortable at a mass level, right? A lot of people did get wrecked because they follow kind of, bad practices, in my opinion. Essentially, not doing your own research, not fully understanding what these platforms are doing and all that kind of stuff. Fortunately, on the channel here, we have managed to avoid Luna crash. We managed to avoid the FTX crash. We did kind of get caught up a little bit with Celsius, unfortunately, but it was good risk management, or at least what we believe to be good risk management. We didn't lose terribly too much to that. But again, since that has happened, we have also reviewed our risk management aspects anyway. So ultimately, we've navigated it reasonably well, and I would say it's been pretty comfortable during this bear market up until this point here. Now, traditional banks are getting into financial difficulty, this makes it also very difficult for retail investors to think about investing. And this is where really the bear market starts to show its true colors with difficulty. This basically means that we're going to find it a lot more difficult to onboard, and regulations are also going to make it very difficult to onboard. Banks themselves are also limiting transactions or just preventing you from participating in this market as well. So you got to bear in mind that crypto kind of fallouts are one thing, but when you start having those compounded with traditional finance also having issues, that's really where the uncomfortableness starts to come in. So I do think we're going to start seeing a lot more in this space in terms of negativity, but that's my opinion. Let me know what yours are. Let's jump over into the retail size wallets. And here we have three clear, distinct moves for retail investors. Now, these spikes to the upside that you see over the last couple of days are driven from fear of one of two things. One, fear that this dip is literally just that. We're going to miss the boat and we're going to go to the moon, so I'm going to buy. That's fear number one. Fear number two is, oh my God, the exchanges are next. They're going to go under. I have to withdraw from the exchanges. And basically, that's what creates these spikes to the upside. We saw this with FTX and we're seeing it again now. I reckon this is a mass withdrawal, but it's not really necessarily just withdrawals. I think there's a mixture of both. I think there's a lot of purchasing going on at the retail level because they do believe that they're in a bull market. And this is just another opportunity to get in. I think, however, that is rather naive and quite foolish if you do not actually pay attention to the bigger macro picture and the way that things are going. I do not believe that we're in a bull market. I do not believe that the data suggests that we're in a bull market, and I do think that retail investors are likely to get wrecked, and as a consequence to not paying attention to the underlying data. Now, here we can see that these three wallets, whether this is Krill at over 0.1 Bitcoin, or Shrimps at over 1 Bitcoin, or Dolphins over 10 Bitcoin, all of the number of participants that have self-custody wallets has increased dramatically. So we should be a little bit cautious. But then what about the smart money? If dumb money is buying, then, well, then smart money must be doing something different. And here we can see very clearly we have a move to the downside on the Kraken size wallet and a move to the downside on the Whale size wallet. A slight move to the upside with the traders. And again, I think they are just reading the markets very well, understanding what is happening with the DXY, which I'll get into in a moment, and being able to participate that way. You can see that this is something that they did back in December. They spiked up massively before the DXY took a dump to the downside, which basically essentially pushed cryptocurrency to the upside. So you can see here that the purchasing of Bitcoin coincided before we actually saw that move to the upside on Bitcoin's price, and now there's another spike to the upside here. It's still in a trend to the downside. I'm not overly concerned about this. They are just taking profits and trading the price action of BTC like they've always ever done. But ultimately, smart money is coming out. That's how I see it, and I do not see that changing anytime soon. So let's actually now go ahead and take a look at the markets, the price action, and take a look at what's going on down there, right? So before I kind of get into the actual charts, I do want to kind of just say a couple of quick things. One, we saw HSBC buy SVB, at least the UK arm of SVB, not the American side or any other country's side, just the UK side, because there are a lot of UK startup companies that have been banking with SVB and obviously are potentially at risk, right? And that's tens of thousands of people in the UK potentially out of work due to SVB going down. So seeing this is one thing. Obviously, the Bank of England instigated this with HSBC. HSBC basically paid £1 for the SVB bank. That's about 73 cents for anyone in the States. And essentially, what they've actually done here is just bought the debt, they bought the liabilities of the bank. That's essentially what's happened here. HSBC are just taking it on board. What the incentives are, I haven't really gone through the details of it. I'm sure that there's going to be some incentive for HSBC to be buying the liabilities of SVB, UK's arm. So it'll be interesting to kind of see what the fallout of all of that will be later down the line. I imagine restructuring and all those things are likely to occur. So I still imagine job losses at SVB, but at least the tech companies might be able to continue as they were, which is interesting. Then, of course, we see that the US, the Federal Reserve and the FDIC are basically doing a bailout. They're basically making good all of the depositors and institutions. They will be made whole. You can see it right there. So again, this is going to be interesting to kind of see how this actually plays out, because this doesn't, in my opinion, change the interest rate hikes. They're combating inflation, and this is a consequence of that combat on inflation. It all stems down to just printing too much money in 2020 and all that money really flowing in one direction anyway. So looking at it and thinking to myself, okay, we'll kind of keep a close eye on this. All they're doing is kind of kicking the can down the road. Inflation needs to be combated, and unfortunately, a lot of banking institutions have probably not positioned themselves well enough to know how to, or just didn't position themselves well enough ahead of those interest rate hikes, of which I expect a lot more to come, even if they do try to be easing off just a fraction over the next 1 to 2 months. It does not mean that they are not going to be aggressive and still attack the inflation. Okay. Then, of course, we see Signature Bank also shut down by state regulators as well, and a lot of people are banking with Signature. So we've got to consider there's a lot of different things that are going on. Okay, outside of just price action and just outside of on-chain metrics, out in the real world, in traditional finance as well as crypto finance, right? We had Silvergate as well. So things are not that rosy. And there's also a lot of things with Signature that maybe you're not so aware of, such as funds that Coinbase has in Signature Bank, or funds that Celsius has in Signature Bank. All these companies that have gone bankrupt with FTX potentially have exposure to Signature Bank, to Silvergate Bank, to SVB, right, and so forth, right? So we have to consider even the liquidations like Voyager, for example. If you're expecting to get X amount back, well, maybe you now lost that ability to have anything back because Signature Bank was shut down, right? And so you have to kind of go down that rabbit hole, connect all the dots and all those things. It's not, all of a sudden we're in a bull market, just because SVB was kind of saved by HSBC for £1, for example, right? We have to look a little bit deeper than just that. So when we kind of think about these things and we start, okay, well, what about price action? Well, we can take a look at this, right? And we can see that price action went up. Why did price action go up? Well, price action went up because the dollar went down. Okay, so basically there's a knee-jerk reaction here to the dollar going down. And the dollar's going down because basically Forex traders and all those kind of individuals are basically saying that the dollar is not worth as much anymore, and will come out of the dollar. And it's a higher risk. So they come out of the dollar and they go into, let's say, Japanese yen or the euro or sterling, right? And basically, you see the DXY comes down, the dollar index comes down. Now, when the dollar index goes down, it essentially tells us that we need to have more dollars in order to buy our cryptocurrency assets or any other asset that is valued in dollar, right? And essentially, this means that price action goes up because you need more dollars. Now, a good way of kind of looking at this is to take a look at a USDC pair. When USDC depegged, you needed more USDC to buy Bitcoin. The Bitcoin USDC pair spiked up to $26,000, right? And we saw that because USDC wasn't worth as much. It's the same concept just with the dollar. The dollar is not worth as much, therefore price of Bitcoin goes up, and other altcoins as well. Now, this is something that can be taken advantage of if you're able to kind of spot that stuff very early on. Ultimately, though, I think it's short-lived. We can see that we're overbought on our Bitcoin pairs, and if we go over to the DXY, we're oversold on the DXY. Essentially, what we're looking at here is momentum behind these movements, and, well, it's telling me that we're about to see a shift to the downside over the next few days or weeks, and it could be pretty brutal, okay? Not only from a kind of fundamental real-world banking crisis, but also from Forex traders and just not wanting to get too involved with dollar. So it's interesting. Now, on this kind of level, I think there's opportunity. And if you haven't yet signed up to BitGet, why not check it out? Linked in the description down below. They're running an offer at the moment where you can deposit 50 USDT and get cashback of $10 USDT. Not only that, you can also get rewards up to $8,000 through various different tasks and deposits rewards as you kind of onboard on the platform. We are also running competitions down in our Discord server, so why not check it out? Linked in the description down below. If you do want to kind of look at the competition side of things, we are offering a $100 USDT prize every single week for the person who has the best percentage ROI within that week period. It resets every week. It's a rolling competition that just happens every single week. So why not check it out? Sign up to BitGet using the link in the description below. Take part in our competition and join us in our Discord server. Okay, so let's jump back down into the charts, right? Do I still think there is a lot more room to the downside? Yes, and I think there's trading opportunities with that, right? So you can short the market potentially at the right time. I don't think we're there yet. Check out this morning's video, as I still think there's a little bit of a push to the upside. My major concern here is that we have a leading diagonal-based structure that could basically take us down into these depths that people are just not willing to acknowledge. There's a lot of bearish people out there who do acknowledge that these lows are possible. I am one of them, and there are many others. However, there are some, unfortunately, large influencers out there that essentially are just calling these things just not going to happen. Bears are too greedy, thinking that the price is going this low. This is something that we've had to endure pretty much from June, when we were saying that June lows were not the bottom. We say that November lows are not the bottom. I still have expectations that price action will go down a little bit deeper. It kind of has to, unfortunately. But that being said, you know, this is a pretty broad range. It's $10,000 to $16,000, which basically does mean that if we start seeing the right signals at around 16K, a double bottom is also something that we could and should consider. Ultimately, though, personally, my thoughts are around the 11,600 to the 13,900. Essentially, I'm thinking 14K is a nice number. It seems to be a nice area to kind of be thinking where price would naturally want to kind of cool off a little bit. There's a good zone in there, and I do think that's a nice place to be. That being said, if we are getting this diagonal-based structure up here, I think we're going to see a very, very deep retracement. I could be wrong. I hope I am, because I don't really want to see $10,000 Bitcoin. I do want to kind of get into a bullish market. Just can't see the data showing us that just yet. So as much as I want it to be bull market, and I really do, trust me on that one, I don't think we're there just yet. I'm going to leave the video right there, though, guys. If you have found this useful and informative, smash that like button. I do appreciate that. Don't forget to join us down in Discord, linked in the description down below. Join us with our BitGet, link in the description below in our Discord server, and take part in the ROI competition. See if you can beat out some of the other competition in the server. It'd be really interesting to kind of see how that kind of plays out. The first one starts today, so looking forward to seeing the results on that come weekend. Guys, until the next one, have a fantastic day.